Welcome to Trading Lounge and the US indices. We'll look at the S&P and the NASDAQ, but we'll spend most of our time on the S&P. So with the S&P here in the monthly chart being the beginning of the week, we'd like to have a look at the bigger picture. Wave 3 here with an A and a B and a C here for wave 4, and then looking for 5 waves up, which is 1 and 2 and 3 and 4, and we're looking for 5. Now wave 5 can be here or it can be over here. There's a good case for both of these to be in play here, and we just need to work through them. And in working through them, so on the weekly chart here from this wave 4, so coming all the way up here to this wave 4, 1 and 2 and 3 here with 5 waves here, wave 3, wave 4, well actually wave 4 in here for this one is a triangle pattern, put that in there. So this would be an A and a B and a C and a D and an E here, and then 5 waves up here for wave 5 of 5 here and finishing here, and we've got a bear market at this point which would bring us lower into this space. So with this from wave 4 to wave 5 here, it would count up there. I'm just going to bring the trading levels charting program up here. This is the S&P on a daily chart. So this is how it would count here with intermediate wave 3 here, an A and a B and a C and a D and an E here. That all fits really nicely. And then 5 waves up here of 1 and 2 and 3 and 4 and 5 for wave 1, back for wave 2. Strong third wave here with strong in the third of the third here, so all the way up here for wave 3 and 4 here, and then 5 waves up here for wave 5 here. At first glance, this move here from 2 to 3 looks rather short. Well, it does in compared to wave 1. But it's actually longer than wave 5 here. So this is a perfect fit for a perfect top here. So this is one of the counts that we know that we can't ignore, and yeah, so that's that on that side of it, and we can see that. We'll look at that in a moment again, but in this particular instance here, we can also look at the other counts, which are having wave 4 over here and having this wave 5 over here with an A wave here, B wave here, and a C wave for wave 4 here. Now the thing here is we're either looking at an expanded flat correction here. With an expanded flat correction, we can look at it as the market moves up. A wave moves down, B wave moves above the previous top, and then wave C moves back down below this one here, and then the market pushes up. It's an A and a B and a C, so an A and a B and a C here, and this is also happening in the Asian markets if we compare them. So that's that particular move, and in this case we'd look for 5 waves down in this particular structure, but all the way down to 2,500 and probably a spike through that. And the third count really is the triangle pattern, which is valid too. So it would be over here, which would be an A and a B and a C wave here. So there still needs to be a D wave and an E wave here. So B, C, D, and E here, and then up in this space here. So that's also possible as well. So we really need to accommodate all of these within our trading, and different people trade different time frames. So we'll try and accommodate them the best we can. So from the weekly chart, understanding those counts, we go into the daily chart here. So with the daily chart here, I've got this count in the grayed out here area here of 1 and 2 and 3 and 4 and 5 here. So it's best to probably go to the cash market to check this count. But basically 1 and 2 and 3 and 4 and 5 for 1 and back for 2. This third wave here, if I take the distance of this and put it from this one here, it does take us above this particular high here. So that's quite fitting as a 5-wave structure to the upside that's finished, and especially the way that this is actually moving to the downside here, the speed in which this is moving here, it gives it more of a bearish picture on this. Right, now getting into this particular structure here, that's what I want to do next. So first of all, there's this move here where we have wave B here, and we have wave 1 here and wave 2 here, and we're going down for wave 3 here. Obviously we're going to get a bounce off, well, this is the closest largest number, and we've got support areas through here. I mean, obviously we've also got support in amongst all this here as well. So in this case here, looking at this as wave 1 and 2 here, and then down for 3 here somewhere, and 4 here and 5 here for this, and that would give us that wave C here, and we want to see the 2,500 perhaps breached here. We would also need to see if this is wave 1 here, roughly speaking. We would also need to see that longer than wave 3 needs to be longer than wave 1 here, unless wave 5 is going to be shorter. So within this space down here, if I just go to the hourly chart and pick it up from wave 2 here on this, it moves down like this. So from wave 2 up here, we would have wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 here for the third wave, fourth wave, fifth wave for wave 1, back for wave 2, all of this wave 1 and back for wave 2 here, and then working lower from here. As I've probably mentioned before, I mean 700 is important, 600 is important, but I've always found this, the 65 number here, 2000, well, I call it 65. So I always find this more important as a balance point, and it won't become obvious on first arrival here. It only becomes obvious much later on. But 700 and 600 will play their parts, but this becomes a more dominant number. So being on the mark, being on the right side at the right time, would indicate to me this here as support or resistance for being long or being short. So I wouldn't be long below this number, and I wouldn't be short above this number. But that said, we are short because we're short from further up here, and in this case here we can bring the stop down from this down just to above the 2700 area here. And if this count is correct, and then we'll be moving down to the 2,500, and you could even look to short on new lows here as well. So just copying that here, popping that under there, and moving lower in that instance. The other count that I want to put in here too is is really what we've got on the Asian markets. So it may not be the case for this, but this is how we're counting a lot of the Asian markets, and in that case we've got wave B here, but we're looking at 1 and 2 and 3 and 4 and 5 here just for wave 1 here. So in the previous chart we had blue wave 1 over here. In this case we've got it here. I don't know if this is the case or not here. We would definitely need to see a bounce off this current low here as coming back to wave 2 here, and then moving down. I mean, in the triangle case that we talked about as well, then we would, if I can just copy that here, then we could also look at this here, which is, I don't know about this one, but as an A wave down to this point, and then a B wave to here, and then a C wave down further. So if it was a triangle pattern, then we'd need to see this here as the A wave, the B wave, and the C blue wave C down here for this here. So I can just put that in here so we can look at that next time. But we certainly need to see that bounce off this level here with this. Yeah, so one of the other things on the 2-hour chart here too, we can look at this in a little bit more detail. So wave 1 and 2 and 3 and 4 here, then 1 and 2, and then 1, 2, 3, 4 and 5 here for the third, the fourth here, and the fifth here. So there's possible a low here. You know, obviously we're in a downtrend here, and you don't want to fight the trend. So if the 2650 becomes the retested resistance, and that means that, you know, we're going through the bounce, which we're going through now. So if that if that low gets taken out, then by all means be short from that point, and we'll be looking down at the 2,500 from that point. So you have to trade what you see, and realizing that we are in a downtrend. We just need to work out places where the market could bounce, and this particular number here is that. And if it does bounce, it has the possibility to go back to 2.8 here. But I also wanted to show Berkshire Hathaway chart here, because we'd been working through this in terms of an A and a B and a C here, very much in line with the banks, this particular pattern, and then we've seen the move up through here. So in this case here, this is a daily chart, and this doesn't look like a B wave here, does it? Do you know, like we've got on the SP 500 and so on? It looks like a nice impulse wave to the upside here. So realistically, it's quite okay to have the S&P 500 as wave 3, 4, and 5 to finish off up here. Okay, so we don't need that now, but yeah. So that's that. And also look at the NASDAQ here. I'm just going to look at that here on. I think we're looking on an hourly chart here, yeah. So in this market, we're short as well. So if we're considering this in line with the S&P with wave 2 here, then we can look at this as 1 and 2 and 3 and 4 and 5 for wave 1 here, and then wave 2 here, and 1 and 2 and 3 and 4 and 5 here. I know that wave 4 overlaps wave 1 here, but this is really how a market moves through things. You know, when you've got your line here, the market will come back down through here, it will move through here, and then it's either going to come back up to this space here, but at some point it's just going to, you know, do that. It's that kind, and there's variations of that. I just call it a classic trading levels pattern, this particular one here, or this is a variation of that. The other one would just come a little bit higher than that and then move down. But basically it's a market that's migrating from support to resistance. That's the main thing to look at it. And we often see wave 4 play out here, and obviously this could be counted differently too, you know. So yeah, but it still leaves us with further downside for this market here. So all I'm going to do here in terms of trading is keep our stop here, and you may already be short from this break here, and that's fine. The stop would still need to stay there. We do have a 3-wave move to the upside here. It doesn't mean that it can just be one, it can be the whole leg, or it can just be part 1 of a leg 2. So it could still come up here in terms of having a little 5-wave structure up to here, and then moving down here, I don't know, or just moving up into this space and moving down through here. But 800 is an important number. It's part of the trading levels thing. So normally when we're looking at a large number like 7,000 here, we would look at the sub-levels above that, so 1, 2, and 3, and we know that if we got a tested support on top of 3, well, then we can trade to 5, but we haven't got that even over here. So it still belongs to this now. Until it gets support on top of 3, it belongs to the closest largest number, and that's the same down here as well. If number 8 here becomes the retested resistance, then the market is going to leave this number here. There is obviously and then be pulled down to 65 there, which is a medium level. The other number in here is the 6720 in here, so just be mindful of that. But this is certainly on the bearish side here, as step 1 on the bearish side, but we need 6.8 here to confirm the continuation of the downtrend. So this is a resistance, then our target becomes the 6,500 at that point. Alrighty, thanks for tuning in, much appreciated. Cheers.